Hello, I'm Dominic Hobson, co-founder of Future of Finance. My guest today is Nigel Lombard, founder and CEO of Peppercorn, an insurtech using artificial intelligence to transform the process of buying and changing motor insurance policies, and just as importantly, claiming against them. Nigel, thank you for joining us.
No, you're welcome. Hi, Dominic.
Now, Peppercorn's actually not your first insurtech startup, it's your third. Could you tell us a bit about the others?
Yes, my first startup was called Drivology. That was a car insurance business using telematics, actually downloading an app to monitor driving. I set that up, worked closely with the likes of AXA, and ultimately that was sold to Mark Study after trading for about 2.5 years. And then the second startup in which I was involved, where I was a co-founder, that was a car insurance MGA, called Hedgehog, which is still trading successfully, where I set up the UK part of the operation. Very digital, data-driven. So yes, this is now my third.
Now, you're obviously starting at Peppercorn with car insurance because you know quite a lot about it, having had two previous startups in the area, and there are interesting things going on, like, as you say, telematics and insurers you drive and so on. But tell me a bit more. Why does motor insurance offer the opportunities that it does? What needs fixing, and maybe what doesn't need fixing in terms of the application of technology to motor insurance?
Yes, absolutely. So first of all, Peppercorn, we are setting out with a purpose. Our purpose is to deliver fair value to consumers in a digital age. So that's our purpose. So that sort of frames the answer. So why the car insurance market specifically? Well, there's a practical and commercial element, which is the largest market opportunity in personal lines in the UK. And therefore, that presents us with the opportunity to make a real difference to as many customers as possible. So it's the market size is one part of it. Plus, the consumer experience is actually quite undifferentiated between different providers at the moment. And our aim is to create a very differentiated experience, fully digital, very personalized. And also, when you look at the products out there, the car insurance products, whether it's true or not, the perception from consumers is that they are largely compared on price, and therefore the products are relatively commoditized and similar, which is not entirely true. So again, by applying conversational AI, which is our modus operandi at Peppercorn, that gives us the ability to create much more personalized experiences, which allows the customer to ask questions along the way that are bespoke, specific to them, and ultimately get the right cover and ensure they get the right cover, which on a commoditized product view, that often is an example might be some consumers believe they've got the ability to be insured to drive other cars on their commoditized products, but that may or may not be true. And finally, the time is right in terms of car insurance, because there's a number of things going on in the marketplace, not least the FCA pricing changes, which are going to be creating a massive sort of a level of change in the way that UK providers operate, all for the good, very consistent with our fair value approach. A lot of our potential competitors out there are distracted. They're either being consolidated or they have new CEOs. They're trying to restructure. They're trying to retrofit digitization, whereas we have the advantage of joining the markets at the right time with correct new business pricing, or more rational new business pricing. And we can build a digital solution from the outset without all the legacy problems attached to large call centers, which we won't have, and also manual processes, which we are going to have very, very few manual processes. Everything's going to be automated. And being frank, the UK car insurance market hasn't really changed that much in 20 years. And 20 years ago was roughly when car insurance started to be sold online using form-based approach. So yeah, the time is right. Lots of challenges in the car insurance world, but lots of areas for improvement that we think we can tackle.
I'm interested listening to you that you talk about the size of the market, its inefficient pricing, it's at a point of structural inflection, competitors are distracted, and so on. Actually, the technology you've talked about only in the context of the customer experience, but does that reflect what the technology is doing at Peppercorn, or is the technology actually going to underpin a lot of the other facets you've talked about, your ability to exploit the structural problems, your ability to seize a large section of the market, and your ability to price what you call fairly?
It's all about the application of the technology ultimately. So we can it is very much about how it's applied. So by building our interface, our customer interaction mechanisms, using our conversational AI, what we can do by design is open up other digital channels. So which is what consumers are really looking for and used to these days. And that's only been exacerbated by the likes of COVID and people being forced to stay at home and use digital solutions. So by having a web-based personalized conversational experience, we can develop that and also offer it through the likes of WhatsApp and Amazon Alexa and various asynchronous messaging channels as well. So and again, back to the application. So things that we can do by design, and this is all about the application again, is create a level of automated underwriting, which again, but that's by how it's applied, developing the AI combined with a sense of the regulations and the rules, and merging those two things, which sound like a bit like oil and water, but by putting those two things together, we can create a whole new customer experience, which is better ultimately for insurers and our underwriters that support us, because we'll write higher quality business. Better for customers because they will make sure they get the right product at the right price, and also better for customers because they can access their policies through their digital channel of choice at their convenience as well, and ultimately better for Peppercorn. And indeed, we can pass these savings back on because we will be a very, very low cost operation, because we'll have far fewer people because of our very high degrees of automation and our reliance upon technology. Although we will still have humans in the business at the end of the day, because ultimately we still need to look after customers. And there are times where the technology will not ultimately meet a customer's need. So we will still have humans in the business. So please don't worry on that front either.
I wasn't worrying. I was thinking that an intelligent robot is bound to be cheaper than a biological robot in a call center. Now, could you explain to us exactly what you're going to be doing? Is Peppercorn purely a brokerage, or are you doing principal underwriting business as well?
We are going about our. So we're in the process of starting up at the moment. So our application, I should mention also that we are supported by the FCA. We're on part of their innovation hub, so we get direct support, and they're very supportive of what we're doing here in our new interface, because it brings increased competition into the markets as well. So we will be an MGA, and we will carry no insurance risk ourselves. That will be our capacity provider's responsibility. So we will be officially registered with the FCA as an intermediary, albeit we will have a level of delegated responsibility and oversight, and we'll be very, very interested in the success on the underwriting profit side of things, not just of the core car insurance underwriting profits, but also the ancillary coverages like breakdown insurance and even premium finance as well. We'll be very interested in that, and we believe that we can bring, because of our higher quality level of sales, because of our automated underwriting, and also making sure helping customers get the right levels of cover. Everybody's going to win, but we're going to be an MGA, i.e. an intermediary carrying no insurance risk.
And how will you work with the actual underwriters? How many of them are willing to work with you? Is that the crucial question for the business?
It's the right question. So we are going about a process of speaking to a number of the major reinsurance and traditional retail insurance companies to select a partner, and that's a two-way thing, because we want to work in very, very close collaboration. Because one of the things that we can bring is not only capturing unique data through this unique interface and having an increased level of automated and scalable underwriting, which is great for the loss ratio, i.e. the amount that's paid out in claims. We can work very, very collaboratively for mutual benefit. So better insurance risks, which are also better for the customer. So collaboratively in partnership, and it's just slightly too soon to talk about who those partners will be. But we're having a number of good conversations, and some of those partners are already, a number of those partners are already lined up.
Now, you've touched to some extent upon structural issues in the motor insurance industry, but like most aspects of the insurance industry, it suffers from very high expense ratios. Those in turn reflect legacy technologies, particularly in terms of processing. It also reflects astonishingly high levels of fraud. And on top of that, what change has taken place inside the industry has tended to lead to churn. This has been the effect of comparison websites and online brokerage and so on. Now, how can the technology you're applying address or solve those issues?
Yeah, that's a great question. So indeed, that's where we started. So we asked ourselves, why are customers churning? What are they dissatisfied with? Why are expense ratios so high? And in answer to some of those questions, before I talk about the Peppercorn solution, so churn is a function of partly price comparison websites encouraging churn to some extent, which is fine. But actually, I think a number of providers have been guilty themselves of helping create churn because of the pricing strategies. So typically offering a new business customer a lower price, a lower premium than a renewing customer. Now, the great news is, first of all, we completely disagree with that anyway, but the FCA are radically changing that with effect from the start of next year. But that has encouraged churn. So that's one aspect. And also, if you look at the differentiation between the different providers, it's not that significant, and there's not that much digitization, never mind convenience of additional channels other than the web. So that's, and the insurance industry is not known for being necessarily sort of fleet of foot when it comes to innovating, for various good reasons, legacy systems, etc. Also, the premiums, arguably, they are higher than they need to be, because embedded in those premiums are the costs of legacy systems, large offices, call centers, staffing, inefficient underwriting, lots of manual processes and the like. So they all have to be paid for somewhere, and ultimately have to find them, end up in the premium. And indeed, and I will come on to the sort of Peppercorn aspects to how we're answering these. I think there's also there's a problem in that a lot of time is spent curing problems, customer problems, rather than preventing them in the first place. So actually, if you get your processes right and you get your product offering and you help customers get the right products in the first place, and they understand any fees and charges that are applicable, if you make sure that the customers really understand that up front, then actually you can avoid a whole load of pain and cost dealing with lots of complaints further down the line, for example. So prevention is way better than cure. And indeed, that's consistent with the FCA's viewpoints as well. So how are we tackling these? Well, by building a digital, very, very customer self-service, very highly automated operation, including automated underwriting. That means that our internal costs can be way lower. So we won't have large offices, we won't have armies of underwriters, armies of customer-facing people. We'll have a handful, a relatively modest number of smart people that are actually teaching the technology to be able to do those things, which means that we can charge a lower premium ultimately, because we don't have to embed those costs. Yes, of course, we're going to be using all the latest data and machine learning. That's a large part of what we're going to be doing, and applying that to improving our processes and our products, and analyzing unstructured data as well as traditional structured data. And actually, by having a digital-led, I hesitate to say digital only, because we will still have humans to pick up the pieces in the back office where needed, and to train the system as well. But having a digital solution which is available through customers' digital channels of choice actually differentiates what we're doing as well. And that's what customers actually really want these days, because they actually see insurance as a bit of a pain on the whole. So we're not here to make it fun. We're here to make it convenient and easy and as low cost and as high value as possible. So yeah, those are some of the ways that that we believe that we can tackle this. And by writing higher quality levels of business in the first place, i.e. matching customers' needs to what they're buying to make sure the customers really understand what they're buying at a low cost. We can ultimately, the customer's better off, the insurers are better off, it's more convenience, and we lower the expense ratio and also improve the loss ratio as well. So this is hard to believe, but ultimately everybody wins by bringing increased competition to this market.
Now, anybody watching this interview would be very struck by how you really come to life when you talk about the technology improving the customer experience. What makes you confident that these digital robotic agents will do a better job than flesh and blood people sitting in call centers or brokerage offices, or indeed doing a better job than price comparison sites or even the dreaded chatbots? What gives you this confidence? How are you training these robots?
Yeah, so it's a good question again. There's a few parts to the answer. First of all, if we just look at what's maybe not quite so good about some of the other channels and solutions that are out there, and then we can sort of compare and contrast a digital agent. So first of all, call centers. Well, first of all, they have a place. Call centers have a place. They really, really do. However, I don't think any of us enjoy dealing with call centers. There's call waiting times. Even when you do get through to somebody, ultimately, they're pretty handcuffed with relatively tightly controlled procedures and scripts and levels of authority that they have as well. So it's not always the best of experiences, and that's actually been probably worsened over the last 12 months because resourcing of call centers has been sort of challenged. But as I say, they still have their place. Chatbots, so they're interesting. They've been very overhyped. The typical chatbots that we have all had the experience of using is pretty generic, isn't very personalized. You can't actually do anything, and is ultimately more of a glorified sort of frequently asked questions sort of Q&A thing. So, and even worse than that, some of the answers just refer you to a different channel. So there's numerous problems sort of out there, which we think by using a digital agent, we can solve. First of all, let's just try and understand what's the difference between, arguably, is that just another name for a chatbot, a digital agent? Well, no. A digital agent is much more than that, because albeit automated, you can actually do things. So that might be making a sale or completing a sale, helping with a customer's query, which is highly personalized and specific to them, actually accessing the underlying database, still, with full sort of identification and verification and security, all of those things. So a digital agent is very different in that it can actually do things. It's not just an FAQ machine, highly personalized, specific, actually implement and do things, make and query your policy, make changes to your policy, those kind of things. And how does that differ from, say, online forms? Well, online forms are very fixed by definition. You have to navigate around to find things once you log in to maybe make a change. You're following the order in which that form is designed. It's a really quite a dull, boring experience. You can compare and contrast that to a highly personalized, very dynamic experience where only the questions and answers are given that are relevant and valid for that customer, and also make them tailored and personalized as well. That's chalk and cheese. And I would argue that this is the next paradigm shift, a bit like when insurance used to be sold in offices, then that went to the phone, and that then went online into forms. I would argue this is the next paradigm shift in the way that insurance can and should be sold and serviced as well. So customers can actually do things, and again, not just through one channel, the web, but in a very joined up manner through other digital channels like WhatsApp, etc., which is what people these days are absolutely using, and they demand convenience, whether they're on the road, on the mobile, in their house, on their sofa, with their phone, with Alexa. So actually, yeah, a digital agent is absolutely the way to go. But ultimately, coming all the way back, it is horses for courses, and there are still absolutely good reasons and times where a human interaction through any channel is still valid. The final thing I'll say on this, in terms of why I believe, about why I know, In the last startup in which I was involved, wholly digital, I implemented online chat as the primary support channel for customers, no inbound call center. So I learned an awful lot from that. And from that, I know the customers welcome and enjoy that mechanism of that method of interaction.
One of the things that strikes me about chatbots is they don't appear to learn from experience when you would expect that actually they would. The quality of their answers will get better and they'd move beyond being, as you put it, a glorified FAQ. Presumably your digital agents are going to have to learn from experience as well, but they're actually going to be going into the field from the get-go, aren't they? They're going to have to perform to quite a high standard from a very early stage. How are you training them to be battle ready, as it were?
Yep. So first of all, me and a number of members of the team have some experience in the world of car insurance. Personally, again, referencing the previous startup, so I know an awful lot about online chat and how customers behave, and the language that's used and the interaction. So first of all, I've got a background in terms of the data. So of course we have to start off with rules. This is a regulated environment, so there are certain things that just have to be done. So actually, there's a lot of there's a combination of rules and AI. Of course, we need the training data in order to help this learn. So we have to start off with something which will be more on balance, more rules based than it will be AI. We'll still be applying AI in the use of natural language processing, where customers ask free formats questions, and we will be identifying intents and using the very latest technology to identify them and solve them. But that's why we will have humans in the background to pick up the pieces. Now, the trick is not just collecting this data, it's actually doing something with it. So, and there's a number of angles here. So we'll be analyzing both structured data, which is what most players in the market do, but also unstructured data, because we'll have it. And that unstructured data will be the conversations. So by analyzing the unstructured data, we'll be able to very quickly, and this will be almost on a daily basis, improve the technology, the conversations, even the products, everything that we're doing. But a lot to do with those conversation designs, and increasingly that will become more and more data driven. We're also going to where the digital assistant fails, and it does go to one of our agents. Our agents are going to be super agents. They're not just going to be there to solve the customer's challenge. Of course, they'll do that. 50% of their job will be learning from each of those and actually putting that back into the conversation. So what needs to be improved? Back to the prevention is better than cure. So there's a continuous improvement cycle there as well. So it's a combination of data and collecting lots of it, which we will be doing. We'll be using price comparison websites to get our customer leads. So we'll soon start to collect the data. We'll have humans that are inputting to this as well. We'll be analyzing structured and unstructured data. We'll also be doing a lot of A/B experimentation so that we can quickly see what mechanisms, what questions, what phrasing works and what doesn't. So we'll be able to test and learn. So the combination of analysis, human input, and data. But that data will very quickly build, and we will be applying it on a very frequent basis. And that's it is about the application. The idea is the easy part, Dominic. It's actually doing it. Now, having been around the block, doing it is the bit that's really switches me on.
Yeah. So as you point out, you'll be creating and learning from your own data as the business gathers momentum, but you'll also be importing data. Obviously, the FCA rule set has to be built into the system. That's a structured data set, I guess. But then you're also taking data from comparison websites. But are there other sources of data? Where else do you get data from to, in effect, train the digital agents?
The part of the challenge is actually an abundance of data in many ways. So every time a quote is provided to the price comparison website, we'll be obviously sending a quote back in real time as part of that process, as well as analysing the 50 plus data items that have been provided by the customer to the price comparison website. We'll be enriching that data with all of the all of the data sources that are out there. So we will start day one with at least as good as the incumbents in terms of our data enrichment. So, that might be credit information, claims information from the Q database, my license, which is another way of saying entering the driving license number and getting conviction details, etc., and the dates which the customer was passed. So we'll be getting masses. We'll be adding to those 50, 100 plus data points by a factor of, at least doubling that. So masses of data. So we'll have all of that, multiple quotes, and then once customers click through to us, there'll be a whole additional range of data that we'll be adding, which is greater than a standard online form, because we're going to have this level of interaction and dynamic question sets, which the customer also asks different questions as well. So almost every single customer interaction could potentially be different, whereas a form obviously is very fixed by definition. So therefore, we're going to have a whole additional data set to go at to help us improve not only the customer experience, but also to potentially improve our pricing and underwriting, and critically, our fraud prevention, because we can add extra levels of fraud prevention at that point, which is enhanced, which is a step up from very fixed forms as well. So yeah, lots and lots of data to go at, all of those unique sort of conversational pieces of data, which is the way that we'll look at them to analyze. So actually no shortage, in fact, quite the opposite challenge.
Mm-hmm. And just on one narrow question, are you going to be relying on comparison sites as your main distributors, but people can still come to you directly if they want? So consumers can come directly to your site and
we plan to launch on price comparison websites. We plan to start on one and make sure that everything is working, because we're going to be brand new. So there's bound to be a few teething problems, albeit we'll be going through a full and rigorous testing environment. Price comparison websites is the sensible place to start. To enter the UK private car insurance markets with the view of going direct to consumer, you would need very, very, very deep pockets to create a new brand to attract customers, which is relatively expensive, it'd be true to say. Using price comparison websites, working closely, which I've done over the last 20 years, I think pretty successfully, is a very good way of entering the market, and indeed is where most consumers are shopping. And it's relatively predictable in terms of the way that you price and the type of customers that you can attract. So it is a well-known, it's a predictable marketplace, not just in terms of volumes that you can predict by your pricing, but also predictable in terms of the pricing and the amount that you pay on a marketing basis as well. So it's the only sensible route to market. Yeah,
I think some of the energy retailers have had a very similar positive experience from the comparison websites, haven't they? So it is a tried and tested model.
Yes.
But data is obviously going to be pretty crucial to your success. Do you ever worry that there's some combination of events conspiring against you? I suppose customer resistance, regulations like GDPR, possibly even tighter privacy laws. Will that make running a business like this more difficult?
I think I don't think so. It's one that we will be obviously monitoring and staying very, very close to. No, I really don't think so. I think in terms of consumer resistance that you mentioned, I'm confident that the convenience that giving consent to utilize data will see the majority of customers and any concerns that they might have be overcome, because why on earth would you want to spend time entering lots and lots of information, which actually, if you give consent to a trusted party that's using your data in a transparent and open and clear manner, why wouldn't you say, tick yes to that? Because convenience, I believe, will outweigh any resistance or concerns. I think the data, the technology is also improving, be that blockchain, full encryption, et cetera, to support and give greater reassurance to consumers as well in that respect. So I think challenges or concerns around security are lesser these days. And I think in terms of regulations and laws, well, they're only there. I think it's a question of embracing them, because they're only there to protect the consumer and ultimately to protect the businesses as well. And I think nobody can really argue with fair use and transparent use of data. It's there for good reason, which is to protect customers, as I say, and to protect businesses. So I think embrace those things. They're not there to inhibit convenience. They're really not. They're there just to make sure the data is used carefully and in a way that consumers understand. So yeah, definitely want to stay close to and monitor very, very closely. But I can't see that being a problem. I'd say actually the opposite. The use of data and the expectation of consumers to be able to access data to make things far easier, be that open banking with permissions, or blockchain or whatever it's going to be, all those things, and easier sort of moving of direct debits, etc. All those things are there for convenience, but in a safe and secure manner. So I think the use of data will only increase.
Yeah, the value proposition will outweigh concerns about it.
Yep.
Is what you're really saying, isn't it?
Yes.
Now, obviously, the sales process is one thing. The claims process is another, and lots more people involved, and lots of organizations involved, and much more scope for the conversation to get ugly. Tell us a bit about how you intend to apply the same technologies to the claims process and why you think that they'll be equally successful there.
It's I think you make a very fair point. The process of going through a claim is pretty complicated, and it's never the same routes every time. Every customer has a different need, and also it's a very emotive time. Indeed, it's where the promise of insurance is really being delivered upon. And we care for our cars, and if there's been a personal injury as well, it is incredibly emotive. So we thought long and hard about it, and we recognize and understand that a digital agent, a conversational AI, is not a human experience, and nor should it pretend to be either. From an ethical standpoint, there's no way we will pretend that our automated solution is anything other than that. So by putting the customer first, we are giving customers the option to use the digital agent to register and check in on claim status, which is appropriate. Maybe for simple things like a windscreen claim, or you were hit, the car was hit while you weren't there in a supermarket or something like that. So broadly, where it's a less emotive, matter of fact kind of claim, I think it's a digital channel is appropriate. But we are absolutely offering our consumers the option to use the more traditional call center route, and we're outsourcing this, and we believe we've narrowed this down to a partner that offers and supports us in our digital channels, but also offers the more traditional route as well. So we'll give consumers the choice, because it is an emotive situation. So we have to put the customer first rather than trying to force a purely digital solution. We will offer a fully digital solution as well. But yeah, customer choice. Horses for courses, Dominic, I think, at the end of the day.
Mm-hmm. So they can handle the simple claim. The robots can handle the simpler claims, but the more complicated stuff will be dealt with as needed in a different way.
I think I think it's more likely that the outcome will be that consumers prefer, for simple claims that are less emotive, they will prefer the digital solution. It is more complex, I grant you, but I believe there will still be the occasion where it is possible on a relatively simple case to have a full claims experience which is fully digital. I really, really do, which is actually often what consumers really want. They just want to be kept up to date, have the ability to be kept up to date, and also get something solved, get the claim resolved quickly. And indeed, that's where technology can really speed up the process. So I think there's an argument which is not just about complexity. It's about the speed of getting something resolved. But as soon as it becomes emotive, personal injuries, car written off, valuations. Actually, I prefer cash rather than a replacement vehicle, or a write-off or something. That's where there's no substitute for a human at this point in time. I wouldn't say never, but that's how I see it going practically.
I was interested to read on your website that you're planning to offer your technology to third-party firms so they can use it to develop insurance offerings of their own, white label it, I suppose. And my first thought about that was, gosh, you're sharing your must be quite an investment to bring these AI-based robots up to the right standard, and here you are prepared to share it with third parties. But I guess this is a way also of broadening your market reach. Is that the debate you've had in your own mind?
So we're going to start off by developing our own solution, which we are going to use in the real world with consumers. So we will have Peppercorn as a genuine provider of car insurance, and we plan also to go into other lines of business as well. So we won't stop at car insurance. Only by doing that can we get real life experience, training data. Only can we really then exercise our technology, and only then can we really improve what we've got based on actual experience. Now, once we've started to do that and start to do it and get that reasonably, I wouldn't say perfect, but increasingly perfected, then we're not going to try and take over the world. So if we say are aiming for a very modest, maybe 1% of the whole of the UK market, which is still relatively large. But if we've only got 1% of the UK car insurance market, there's another 99% available. And we know that part of the rationale behind the timing of doing this is our incumbent competitors are challenged by many other things. So therefore, we can access and apply our technology through white label solutions to other parties, to incumbents who might want a quick head start solution, to a neobank that might want to get into insurance as well, not just car insurance, as I mentioned. So why not start to apply the same technology elsewhere in other lines of business, not necessarily just in the UK either. So why not start to apply that? But I think the key thing is actually demonstrating it and proving it and making it viable and having our own line of business that we can demonstrate that. But yes, then absolutely launch into insurance as a service and software as a service as well.
Now, you also say on your website you're not planning to stop at motor insurance. What other areas are you looking at, and what sort of timescale are we talking about?
So there are some natural follow-ons, certainly in the UK. If you enter into car insurance, then why not? For many of the same reasons as I've already talked about in terms of the marketplace for car insurance, the same applies to the likes of, say, home insurance. So it's a natural expansion into channels like that. And that could be, I wouldn't want to be too specific about this, but that could be 2 to 3 years down the line, or even but that kind of timescale to enter into other lines of business. But why not SME as well? The technology can apply there, and why not into other regulated lines of business? Anywhere where there's a level of commoditization, customers want to self-service, so that could be even into the likes of energy as well. Why not? Because it's a relatively complex product that we can help with customer understanding. We can help with digital channels of choice as well. And why stop at the UK as well? So other lines of business in other territories as well, and they could be car, auto, or any other lines. So many options which we will narrow down. Home insurance would seem like a natural first stepping stone after a couple of years of trading on car insurance.
But I just heard you say that your ambitions don't stop at insurance. This technology could be applied to energy, telecoms, broadband.
Yes.
Yeah.
Yep. Why not? Complex products where customers need to understand what they're buying. They are relatively complex. So again, having a very form-based approach where customers don't really get the opportunity to interact and sort of drive drive the conversation and ask free text questions and don't have a particularly personalized experience, anywhere where that's true, this kind of technology can apply. And once we've started to understand the customer behaviors and the way of phrasing questions and the way of even segmenting and having different sort of personas of digital agents for different customers according to their preference, why not take those learnings and that level of IP, if you will, and apply it elsewhere for consumers' benefit. And back all the way to the very beginning, Dominic, in terms of our overarching purpose, it just happens that we're starting with car insurance, is to deliver fair value to consumers in a digital age. That is our purpose. So why not apply it in its broadest sense?
Which brings me to one last question for you, Nigel, which is that you've mentioned a number of times during the course of this conversation that people sometimes prefer a digital experience. They want it to be personalized, but they prefer a digital experience. So if you look, I don't know, 5-10 years ahead, and maybe you don't need to confine yourself to personal lines insurance here, but my question is, what do you think the customer experience is going to be like of buying insurance products, utility products in a decade's time?
Yeah, so there's a few things already sort of starting and being talked about. So I think in 5 to 10 years' time, be it insurance or other avenues of other product lines, but if I talk about insurance, I think the same applies to other products, but anything that's probably regulated. So first of all, I think the ability to increasingly tailor, so less commoditized, more personalized levels of cover. I think consumers are going to be demanding that. I think the technology will support that. So the ability to better tailor cover, that's one thing. On-demand insurance is clearly something that's going to be of increasing interest because in an increasingly sort of disposable society, if you will, and people living in town centres, they don't always need a car. So they don't need a car for certain periods of time in this example. So on-demand insurance, that will absolutely increase, and therefore that effectively starts to become embedded within other products that you're buying or using or renting or hiring for that period of time. So there's that. And if you are buying something, rather than buy something and then go and sort out your insurance for that item separately, embedded insurance at the point of sale is going to be, I can see that very much as the way of going. And Amazon is already doing it to some extent. I'll just add extended warranty. Now that's a small and relatively trivial example, but I think where it's more personalized, I think the technology at point of sale and self-servicing to make sure that that cover does indeed meet your needs. I think embedded insurance sales alongside as part of a product is going to be the case. And I think telematics, the much sort of talked about for the last 15 plus years and arguably overhyped telematics, I think as that eventually starts to be, that data becomes accessible via auto manufacturers, rather than via retrofitted devices, and therefore the ability to have access telematics data, albeit once we get over the challenges of this sort of abstract question of who owns the data. But I think increasingly telematics will go hand in hand with on-demand insurance because it will be embedded in the vehicle. So again, it's not something that's an aftermarket consideration. So I think all of those things are going to happen or are already happening in many cases. But probably they're at a very niche, relatively niche level. So I think the real question is which of those things are going to be adopted and at what speed. Nobody knows the answer, of course, but those things are all going to increase over time. And I think the Peppercorn solution as well, particularly the insurance as a service, which can apply to any type of product, I think that could fit very, very well with embedded point of sale products as well. So I can see what we're doing fitting in very well to into those marketplaces, and also the ability to tailor cover rather than the one size fits all kind of form. suddenly a very personalized dynamic experience goes hand in hand with different levels of cover, which are tailored. So yeah, I think the future of insurance is healthy, and then we get into self-driving vehicles, which is a whole other paradigm as well, which is already starting. That's a whole other webinar, that one, Dominic.
Yeah, well, I said this was that was my last question, but actually listening to you makes me wonder, should you be working with motor manufacturers?
A number of people have tried. I think the answer is yes, but it's a question of when. And I think it's how the data is accessed. And I suspect the best way of doing that, because there's going to be a need for a level of standardization, which is incredibly challenging, not just in terms of the world of insurance. So to access telematics data is one very different by each manufacturer, first of all. So therefore, rather than having one single interface, so to speak, there will probably need to be a level of either standardization or an independent party that effectively aggregates that information into one place. And then even within that, standardization of telematics data is massively challenging because different devices capture different levels of data to different levels of confidence and to different levels of accuracy of GPS locations and accelerometers, and it's a whole other realm. So I think the answer is yes, but it's not now. It is a when, though. I think it will come. Having been sort of understood quite a bit about the telematics market with one of my previous startups and where the marketplace is currently at. So it's a slightly vague answer, but I think that's the truth of the matter.
Yeah, well, walk before you can run and run before you can drive, I suppose. Nigel Lombard, thank you very much.